Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the corporate jargon. And today we're diving into NOVAVAX's latest report to see what's really going on behind the scenes. So NOVAVAX Inc., the company known for its COVID-19 vaccine, has just dropped a report that's packed with some interesting financial moves. It's not exactly a thrilling roller coaster of numbers, but it tells a story about the company's strategy and how it's managing its money. The big news here is that on August 27th of last year, NOVAVAX made a pretty significant financial transaction. They basically swapped some older debt for newer debt. Think of it like refinancing your house, but for a big corporation. They issued new notes with a 4.625% interest rate, topping up to a cool $25 million in total. This new debt is due in 2039. They did this by exchanging about $175 million worth of these new notes for almost $149 million of their older 2027 notes that carried a higher interest rate of 5%. So they're paying less interest going forward, and they've also extended the life of this debt. It's a smart move to lower their interest payments and push repayment further into the future. These new notes are what we call senior unsecured debt. That means if something really bad happens to NOVAVAX and they can't pay their bills, these note holders get paid before other types of debt, but they don't have specific assets tied to them. The interest is paid twice a year and it's a bit lower than the old notes. Now, here's where it gets really interesting. These aren't just regular bonds, they're convertible notes. This means that the people who bought these notes can choose to swap them for NOVAVAX's stock instead of getting their money back when the notes mature. The initial rate for this swap is set at almost 90 shares of NOVAVAX stock for every $1,000 of notes. This also means that the effective price they're paying for each share of NOVAVAX stock is about $11.14. This was a bit higher than the stock price on a specific day in August, which suggests they were able to convince investors to pay a premium for this conversion option. There's also a maximum conversion rate, which means the company could end up issuing a lot more shares if these notes are converted. Up to about 25.7 million shares could be issued if all the notes are converted at the highest possible rate. This is something for existing shareholders to keep an eye on, since it could dilute their ownership stake. NOVAVAX also has the option to buy back these notes before they're due. They can do this starting in September of 2028, but only if the company's stock price has gone up by a certain amount. If they do decide to redeem the notes, they have to pay back the principal plus any interest owed. And if something big happens, like a major business combination, or if NOVAVAX's stock gets delisted, the people holding these notes can demand that NOVAVAX buys them back. This is a protection for the investors, making sure they can get their money out in certain bad scenarios. Like most debt agreements, there are clauses about what happens if NOVAVAX fails to meet its obligations. These are called events of default. This includes things like not paying the interest or principal on time, or failing to make those stock conversions. There are cure periods for some defaults, but in very serious cases like bankruptcy, the entire debt becomes immediately due. Interestingly, there's a special clause about reporting failures. If NOVAVAX messes up on certain reporting requirements, they get a year to fix it. If they don't fix it within 365 days, then the notes can be accelerated. This shows a specific focus on transparency and timely reporting. This next part is a bit of a formality, really. By issuing these new notes, NOVAVAX created a new financial obligation. It's pretty straightforward that when you borrow money, you owe money. This section just confirms that fact. And this section talks about the stock. Since these notes are convertible, it means NOVAVAX might have to issue new shares of its stock. They state that any shares issued through conversion will be done so under a specific exemption in securities law that allows companies to exchange securities with their own existing security holders. This is how they avoid the usual complicated process of registering stock sales with the government for these conversions. The filing also lists the actual legal documents governing this debt. The indenture is the master agreement between NOVAVAX and the bank that acts as the trustee overseeing the notes, and the form of the actual convertible notes are also attached. These are the nitty-gritty legal details that back up the entire transaction. Now let's wrap up with my take on all this. NOVAVAX is clearly making proactive moves to manage its debt by refinancing their older, higher interest debt with these new lower interest convertible notes. They're doing what any smart business would do to save money and improve their financial flexibility. The conversion feature is a bit of a gamble. It means they believe their stock price will eventually rise above that conversion price of $11.14, making it attractive for investors to swap debt for equity. However, there's always a risk with convertible debt. If the stock price doesn't perform well, the debt just stays as debt and they still have to pay it back. If the stock price does skyrocket and many notes are converted, it could lead to a significant number of new shares flood in the market, potentially diluting existing shareholders. This is a key risk to watch. The focus on debt management and potential future equity issuance shows NOVAVAX is thinking about its long-term financial health. Their future success hinges on their ability to develop and commercialize their vaccines and for their stock to reflect that success. If they can achieve significant milestones and their stock price reflects that growth, then this debt restructuring will look like a brilliant strategic move. If not, it's just debt that needs to be repaid. Overall, NOVAVAX seems to be cautiously optimistic about its future, using financial tools to position itself for potential growth. The success of this debt maneuver will ultimately be tied to the company's operational performance and market reception of its products. Alright, that's our breakdown of NOVAVAX's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.